Sale minus variable cost is contribution margin. So we can say that profit is equal to contribution margin minus fixed cost. My bad. Minus fixed cost. So profit can be CM minus fixed cost. So it's up to you. So this is just for the verification. This equation is true or not. So you put the variables formulas, the values of the variables here, you find out it's true, right? Now, so we have developed up till now that profit is equal to CM. What's going on here? Yes. Profit is equal to CM minus fixed cost. So if we just, I think before that one, we just derive the formula here. So we know that profit is equal to sale minus variable cost minus fixed cost. Come on. Let me turn off my video because I cannot write like this. So let me do that. Please wait for a while. Okay, here we go. So we know that profit is equal to sale minus variable cost minus fixed costs, right? So these are the total sales. This is total variable cost. This is total fixed cost. So if we want to convert that into units one, so profit is equal to, let me just write it down, profit is equal to price into quantity, which is total sales, minus variable cost, that is per unit, multiplied by the quantity. I should write T here, total variable cost, total fixed cost. So this would be total variable cost and this would be total fixed cost. So that's why we can just easily, remember that one. This is total fixed cost and this is total fixed cost, right? So if you see here, we have Q and Q common here. So we can just say that, okay, Q into sale price minus variable cost per unit minus total fixed cost, right? Or we can put CM per unit as well. So the formula gonna be that profit gonna be Q into CM per unit minus total fixed cost. This is just the iteration or rearrangement of the formula. We just found out from simple equation that profit is equal to sale minus total variable cost minus total fixed cost. So all of the future discussion will depend on this formula. So let's just go back to our slides here. See, so profit is equal to sale minus variable cost minus fixed cost. We just converted these two, sale per unit, variable cost per unit. So it would be, so if we find out, here we go. So P into Q minus V into Q, it satisfies the equation. And if we put the CM ratio, it would be, yes, if we put the CM name over there, because formula is sale price minus variable cost. So it would be like this. So we can say that in equation form, profit is equal to CM per unit multiplied by the quantity minus fixed cost, right? So let's verify this one. So we know that if we know that we sell in units 401, our sale price is 500, 300 is our contribution, variable cost. You just rearrange this equation on each and every step, you will find out the same profit. So either you write this equation that profit is equal to total sales minus total cost, answer would be the same. If you write it down, profit is equal to total sales minus total variable cost minus total fixed cost, answer would be the same. Or if you write it down like this, answer would be the same. So if you don't know the basic mathematics, just remember that one. The basics of the derivation of this formula is the basics one, which is profit is equal to sales minus total cost. Simple, right? So what we have learned from equation form, that is profit is equal to CM in units multiplied by units sold minus fixed cost. So why we didn't write the total here? Because fixed cost cannot be used at the per unit, so that's why that segregation, that okay, we should write total or not, it's irrelevant here. Okay, so after derivation of this equation and understanding that our equation is good, it supports our previous equations as well. So let's just talk about the graph. I'm not going to spend too much time here because that is not the agenda here, but since it's a part of your learning objective, I'm just going to just talk about that. So we can also show the relationship of profit with respect to the graphical form as well. So we have made this contribution margin income statement and we put the units as 0, 200, 400 and 600. And we find out that, okay, on 0 we have 80,000 loss, on 200 units we have 40,000 loss, on 400 we have 0, and on 600 we have 40,000 profit. So let's just draw this. On graph, on x-axis we put units, and on y-axis we put dollars. Here we go. So fixed cost remains fixed, 80,000, 80,000. So you see, fixed cost remain the same with the level of output. The variable cost is upward sloping because if units are increasing, see, if cost is increasing, units are also increasing. But if we draw the profit line, profit is this profit against the unit 0. On 0, 80,000 is loss. On 200, 40,000 is loss. So if you draw the profit line as well, because we don't have the negative numbers, so we just start from 0. So you see here, So it means, sorry, this is total sales, not the profit one, total sales. So you can also find out the area of profit as well. So area above, or sorry, area between variable cost and the total sales is your profit. So that is the graphical representation. Normally in mathematical geometry, you learn these kind of stuff, but it gives you where we are having on break even on this point, where your sales is equal to your cost, right? And which cost? Total cost. So the nature of the total cost is like a mixed cost. It increases with the level apartment, but you need to segregate that one. So we segregate that one, and we saw the behavior as fixed cost is just remains fixed. So if you find out the relationship between total cost and sales, so whenever it cuts here a point, so that point is the break even. So if you are a CEO or if you are working for someone, so just look at the graph where the total sales and total cost interact. So that is your break even, and above, in between the cost and the revenue, that is the potential of your profit, and that is unlimited. So you see, these are not parallel, these are non-parallel. So the volume of the profit or the profit size is going to be increasing after that one. So you see here, it is shrinking here. So it's going to be loss, 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 and also loss is going to be increased as well. So that is just for graphical representation. I'm not going to stress more here. So you see, where it curves, it is break even. We also verified from our equation that the break even is 400. Okay. Okay, here. Our third learning objective is use contribution margin ratio to compute changes in contribution margin and net income resulting from changes in sales volume. Let's just talk about this. How we can find out the ratio? So remember, ratio is everything divided by sales. Simple. So contribution margin ratio, contribution margin divided by sales. Simple. Variable expense ratio, variable expense divided by sales. Either per unit or either in total. Answer remains the same. So 150,000 150,000 variable cost divided by 250,000, answer would be 60%, or 300 divided by 500, answer would be 60%. So it's up to you. You can use either, if you are given per unit formula, you can also find out the variable cost ratio. If you are given the total numbers, you can also find out the variable cost ratio. Plus, we already know that the sale price minus variable cost is equal to contribution margin, right? So similarly, if sale price is 100%, minus 60% is your variable cost ratio, so left remain would be your contribution margin ratio. So you can use different ways to find out the contribution margin ratio. If you know the contribution margin and you don't know the variable cost, so just